So copper, in 2018, I had a strong macro thesis on gold. Then the emergence of electric vehicles and AI has come since I went on my own in 2018, investing in these junior mining companies. So the tailwinds for copper dramatically improved over the last 7 years, especially in the last kind of 3 to 5 years, with the emergence of really above trend demand, again, driven by electric vehicles and the power trade of AI, needing a lot of power to fuel the AI revolutions.
This video has been disseminated on behalf of Leviathan Metals. Welcome everyone, this is Mariusz Konieczny. I'm chatting with Michael Gentile, who owns approximately 10% of Leviathan Metals. So I thought it would be a good idea to sit down with Michael, chat with him about his background, why he likes the company, where he sees the company going. So Michael, thank you very much for joining me.
Hey, great to be here, Mariusz.
Okay, let's start with maybe for my audience, introduction, who you are, your background, and then we'll go into the company.
Sure. I've been an institutional money manager for about 25 years. From 2000 to 2018, I worked as a fund manager, ran about $1 billion of institutional money. In 2018, for family reasons, I left that job and was very bullish on gold. I had a bunch of capital. I started investing very aggressively in the junior resource sector. Started buying, 5, 10, 20% positions in junior mining companies. I've been very successful doing that the last 7 or 8 years. Today, I'm the top shareholder of probably about 25 junior mining companies in Canada across different commodities. I'm on 5 boards and I'm an advisor to a bunch of other companies. And my business model is I try to find companies very early, small market caps, $5 to $30 million market cap, that I believe have potential to go up 20 to 50 times my initial investment. Not all of them work. My model is only a few of them will succeed, but the ones that succeed will make you those fantastic returns and pay for the mistakes that you normally make in the very small microcap space. And Leviathan is one of my most recent investments of that type of strategy, where I acquired about 10% of the company on the recent financings to acquire the asset in Botswana.
Leviathan Metals is run by Luke Norman and Jeremy Crozier, the geologist. How did you get to know these individuals?
Yeah, I've known them through the industry for quite a while. I guess, Myerson, in my business model, what I look for in a junior mining company, you need the combination of an economic geologist, someone who knows how to find economic deposits, which are very hard to find, and also someone who has the capital markets profile to properly fund the company, market the company, and raise capital from the right type of investor. So most companies, in my experience, Myerson, are either run by a geologist who knows very little about markets, or a market guy who knows very little about geology. When you put both two together, that's when magic starts to happen in the business. So was really excited when I saw both the geological opportunity at Leviathan, Jeremy being very, very passionate about this project, a lot of experience, a significant ore finder in his career, and then Luke having a lot of CEO experience, capital markets experience, strategic business experience. That gave me a lot of confidence that I was coming into a story that has all the ingredients for success.
Okay, so that's on the management level, but what attracted you to the actual company or its projects?
Yeah, so for me, one thing people don't look enough at in the business is available infrastructure in place. So when you're looking for copper, gold, whatever that may be, I'm holding for 5 to 10 years. So I'm looking for that 20 to 50 times return. So how do I make my money? It's not off a good drill hole. It's not off some marketing and promotion in the story. It's really about, do we find a deposit that has potential to actually turn into cash flow? Mineable copper, mineable gold, mineable zinc, silver, whatever you're looking for. So what really got my attention at Leviathan was literally right next door, like on the property boundary, is a Chinese-owned company that paid $1.8 billion for a major copper concession that's currently in production, a very significant copper-producing asset right on your doorstep. Now, what that meant to me was, obviously, the geology attracted me because we think the geology continues onto our side of the border. Geology doesn't stop at an arbitrary property boundary. Geology simply continues on a trend for kilometers at a time. But second of all, no matter what we find here, Mariusz, I'm pretty confident we're going to find something that copper can instantly be turned into cash flow with the existing facilities next door. If you were to build that from scratch in a brand new part of the world, it would cost you billions of dollars to put that infrastructure likely in place. That's already in place. So the hurdle rate for a commercial discovery here at Leviathan is very, very low, and the geology is compelling.
Nobody else, including MMG, and certainly not all the other juniors, is sitting on a structure like this. We've looked at all of them. Nobody else has got this.
And so that to me is very, very key. And most investors don't distinguish between drilling in the middle of nowhere, between drilling next to an existing mine, drilling next to an existing mine is infinitely more valuable than drilling in a brand new area because you've got to put all the infrastructure in yourself. So that was the initial attraction on top of the management and the passion they have for this project. The compelling geology of the project is the fact there's a producing mine literally on your doorstep in Botswana.
Well, when you say that you could literally use the neighbor to create it into cash flow, do you mean that the neighbor's plant would use this deposit to to produce copper and sell it?
Correct. I mean, so most mines have a finite mine life, right? Whether 10, 20 years, eventually they run out of resources. But you build these facilities, these mills, the plants that last for 50 to 100 years. So typically I like being in areas where there's already existing mill plant infrastructure because that tells me there's, at some point in time, that mine or that mill is going to need feed. It's going to need additional copper, additional gold sources for it. So the base case scenario for me is that we find something interesting here, that new discovery, that'll be very attractive to our neighbor. The upside case is you find something that's so huge, so significant, that it justifies the investment of a new mill and new plant. But I love having that duality of plan A or plan B. And so, yes, the likely acquirer, we haven't even found anything yet, but likely when you do make a discovery here over time, make a discovery, the likely buyer is the neighbor because they could just take that ore, a kilometer over to their plant and be instantly producing cash flow. They have the biggest synergy, the biggest cost advantage to produce that copper or gold that's found there. But if the geology continues, which it likely does, and it's a significant scale discovery, Botswana is an emerging hotspot, a copper hotspot. So there other companies are likely going to want to have a toehold in this area. So you'll have that natural tension from outside entrants versus the incumbent entrant. But that's a very attractive position to be in for a junior exploration company.
Well, it's interesting that you're saying that plan A and plan B, because when I was chatting with Luke, he was talking about the proof of concept and not the idea is not necessarily just to sell this project to a neighbor, but to have a discovery big enough so that it's its own entity and it would allow a new entrant,
correct,
a developer into this area.
That's the best outcome for shareholders, right? If you have a discovery that's big enough that a new entrant would want to come in, that puts pressure on the incumbent. There's natural tension. Like we're trying to sell your house. If you have 5 bidders for your house, you're going to get a much better price than if you have 1 bidder for your house. What I'm saying is, yes, that the geology definitely looks like it has the potential to be a standalone discovery. Yeah, we haven't drilled a hole yet. We haven't found anything yet, but the geological structural setting is propice for a large discovery. But what I'm saying is if you already have a natural incumbent in the area, that's a lot better position to be in than if you're alone and in a new camp trying to prove to all the other corporates that there's something there. We're already in a very productive, highly prolific copper mining belt. Owning a part of a producing copper belt in an emerging part of the world is extremely valuable. You rarely see that controlled by a microcap junior mining company.
Why is this area so hot?
Obviously, copper prices being higher have forced the companies a lot of low hanging fruit. The reason why the copper price is higher, Marius, is a lot of the low hanging fruit in North America has been picked, and you're seeing in any copper discovery you make, the grades are lower, and the size of the discovery are lower. So we're discovering smaller, lower grade deposits in areas where people have been looking for copper for 150, 200 years. It's normal that the low hanging fruit, the easy stuff at surface, the high grade stuff at surface, the higher grade deposits have mainly been found. And so the industry's been forced to kind of spread her wings and look at other areas of the world that are less followed. The geology in Botswana is fantastic. It's very similar to very large copper belts elsewhere in the world, but has not really seen much exploration dollars. What I also like about Botswana, Marius, is that the political environment is quite stable. It's a Christian democratic country. You don't see a lot of the noise that you see in other African countries that can often affect, security of ownership or just security outright. It's a very safe place to work, and they're very encouraging of mining investment in country. And it's only been opened up recently, the last kind of 30 to 40 years in terms of starting to open their minds, and really the last 10, 20 years starting to open up their lands for discovery and exploration and investment. So it's the geology would have screamed, drill me for the last 200 years. With the politics and just the remote nature of the country has led it to be less explored than other parts of the world. And so this provides a huge opportunity because the geology really is quite compelling.
You said that you went on your own in 2018 and because you like gold. Now, this project, Leviathan Metals has a portfolio of projects, but we're mostly talking about the project in Botswana.
Mm-hmm.
which is next to the Chinese buyout for $1.9 billion. But we're talking copper. That's not gold. Copper.
Yep.
So why copper?
So copper, in 2018, I had a strong macro thesis on gold. Then the emergence of electric vehicles and AI has come since I went on my own in 2018, investing in these junior mining companies. So the tailwinds for copper have dramatically improved over the last 7 years, especially in the last kind of 3 to 5 years, with the emergence of really above trend demand, again, driven by electric vehicles and the power trade of AI, needing a lot of power to fuel the AI revolution. So the supply demand fundamentals in copper have dramatically improved. And just like gold, there was a massive 2-decade period of underinvestment in exploration and underinvestment in putting on new production online. And so what we see is the farther out you look in copper, the wider the demand versus supply deficit grows. So we have too much demand, not enough supply coming in the copper market. So the outlook for copper prices is very robust. And obviously, a lot of the projects I look at too have copper and gold. And so those are my two preferred commodities right now, copper and gold. And so I'm really focused on projects that I believe can come into production. I'd rather own a zinc mine that's going to go into production than a gold or copper mine that's not going to go into production. But my preference would be copper and gold in areas that I believe have a very good chance to be producing assets. Again, because my time horizon is 5 to 10 years and my return threshold is very, very high. So to me, copper is a great place to be. And remarkably, the junior developers in copper, the copper producers are getting a lot of love in the market, trading at relatively high valuations, but the developers and the resource stage companies are not quite getting the same level of attention yet. So I still think it's a quite interesting opportunity to capitalize on that bullish copper stance in the smaller companies that get less attention in the market.
Are they not getting a lot of attention because copper price hasn't surged the same way that gold and silver did?
Probably. The $5 price in copper is a psychological threshold level. Same thing you saw on gold. When gold went through 3,000, everybody said, "Oh, it's just going to go through 3,000 and crash right back down." Once gold went above 3,000, stayed above 3,000, and went above 4,000, the market said, "Okay, maybe this is really sustainable and durable in terms of pricing." I think the same thing will probably happen in copper. If we can stay above 5 and push to new all-time high levels, the longer we stay above $5, the more the market will start, especially in the junior resource sector. There's few investors. So it takes a while for people to react and kind of get confident to deploy capital in that space. So as the longer copper stays above 5, the better it trades higher in the future, the more money will start to flow down cap. And that'll be the opportunity for stories like Leviathan to attract new investors.
Leviathan Metals recently changed its name from Leviathan Gold to Leviathan Metals, and it also acquired this particular project in Botswana by an acquisition of a private company. But now, what do you now that the transaction is, I believe it's completed. There's like this conditional approval, non-conditional approval. I'm a little confused if it's completely done, but like now the company is where it is. What's the roadmap? What's the roadmap for investors now? What's going to happen? Drilling, like walk us through maybe the next 3 to 6 months.
Yeah. So when I make an investment, especially I'm buying, 10, 15% of the company at the same time, I'm always asking myself that what are you going to use my money for? And where's the company going to be next time it comes back to market to finance this next stage of activity? And so I always like to ensure the companies I invest in are fully funded. So I can say with confidence that the company, we raised enough money on the acquisition and on the financing we did concurrently to do the acquisition. The company is fully financed to drill. So right now they're doing all the ground truthing, the IP, the geophysics, the soil sampling to get ready to set up for some drilling as soon as the acquisition officially closes with the TSX. So we're fully funded to drill. So the next time there's going to be a private placement, you'll have drill results already in your pocket by that point in time. So there's a really good chance of hopefully some positive news on the exploration front. The other thing I like about this story too, Marius, is obviously the copper asset gets all the attention because that is the tier 1 kind of game-changing discovery. But there's also a lot of extremely valuable assets within the company that investors aren't as aware of that you're getting basically for free when you buy Leviathan. So there's one in Bosnia, which I really like. It's a very silver kind of link ZVMS system. Dundee Precious Metals just bought Adriatic Metals in Australia. It's about a $2 billion acquisition. I know I have a lot of familiarity with those type of deposits. Don't sleep on that one. That's a really exciting asset that I think is going to surprise the market. So that has secondary value, potential new discovery value there. That could either drive the share price higher or potentially be a monetization candidate in the future. And they also have some gold assets in Australia that are quite well positioned. That was the old assets held in this company. I think that have some significant value, along with some uranium assets in Botswana. So if you're a shareholder, don't assume there's going to be other financing down the road. If we make a big discovery, obviously the market will re-rate our stock, but there's also some non-dilutive levers the company can pull with these other assets to raise capital to not dilute shareholders any further. And as a big shareholder, I'm very focused on minimizing dilution. So those are assets that investors should also get to know a little better in the story over the months ahead, because there could be significant sources of value, especially at this market cap for the company.
So that's kind of provides investors with based on the current market cap, a bit of margin of safety.
Correct. Yeah, you got significant. If Botswana wasn't there, I could make an argument that the other assets in the company potentially could make up the vast majority of the current market cap. So depending on how you look at it, you're either getting Botswana for free or close to free, or you're getting getting a lot of upside from these other assets the market's not paying any attention on. So yeah, I definitely look at that because I hold for such a long time, right? So I make such big positions. Margin of safety, entry point, intrinsic value of what I'm buying in the ground is very important to me. And there's not a lot of discovery risk here because you've got the assets in Bosnia have already been truthed by trenching and soil sampling. The gold assets are known. And then obviously the copper asset is an extension of prolific gold belt sorting production. So unlike other early stage stories, the chance of making a discovery here are quite high.
Well, and also because you own such a big percentage of the company, I mean, you can't just trade in and out of your position. You're stuck. So you better be right.
That's why I have a long horizon, and when I'm right, I want to make a lot of money. that's the business model I'm in.
Okay, so I always like to give people a roadmap, a vision. So now it seems like the margin of safety is covered. The other assets should, we could make an argument they could be worth as much as the market cap of the company, and we're getting the Botswana asset for free. But what's the vision? What's the upside if we are successful?
I mean, obviously, the blue sky upside, again, I'll warn your viewers, we're far from this, right? But the upside is you're in a tier 1 copper belt, and you've got a discovery next door that was bought for $2 billion when copper was $3 a pound. Copper is now $5. You have the potential to find something similar to what our neighbors have next door. And that's a dangerous word, but closeology and geology, right? We're very close. But if you take a hard look at the geology, the structure repeats itself multiple times. And every time there's a major fold in the system, that's where the next door neighbors have found significant copper discovery. So we have a significant fold on our property adjacent to a producing mine. If you find a tier 1 commercial copper discovery next to a producing copper mine, that's a value in the hundreds of millions of dollars, potentially in the $1 billion value framework. And the market cap is in, sub $30-40 million Canadian today. So that's what we're playing for. Again, we haven't drilled a hole yet. You got to discover it. There's no guarantees. This is a risky business, but I like that structural setup there. And the other secondary assets I do think have significant potential as well to be advanced and create value, well beyond the current market cap in the right market environment. So yeah, there's a good margin of safety. We're funded to drill. You've got the property acquisition closing imminently. At that point in time, the company ready to start talking about their targets, what their drill program is. And you've got a well-backed company that knows how to raise money with some really good investors behind it. So they'll be very careful about dilution and making the right decisions to protect shareholder value in the future.
Okay, now be honest with me here. I know there's several assets here, but if it wasn't for the Botswana asset, I don't think you would have gotten involved.
Clear to know, the Botswana asset's the main event. When you go to a rock concert, you want to go see U2 or the Rolling Stones. Love to know there's a great opening act or two in front that I'm really happy to see play ahead of them. The U2 or the Rolling Stones, the main event here is Botswana. But like I said, it's always good to have a great opening act or two before Botswana and concurrently with that. So there's a lot of value drivers here. But clearly, if we're sitting here 5 years from now, Marius, and we have $1 billion market cap, to me, in all likelihood, it's Botswana. That's the one that's delivered that value to investors. But I like the fact there's duality of options, multiple ways to win at Leviathan.
Okay. Well, thank you for doing this interview. My final question is, do you want to leave my listeners with any concluding thoughts about yourself or about the project or about the company?
I mean, I think it's a great set. I think investors have to do their homework. My other advice to investors would be, if you're in the junior mining space, own a portfolio of names. Don't put all your money in one basket. As much as we love Leviathan, I really do love this story. I think you do your own homework, understand it's a volatile space, but you've got a really good risk reward here at Leviathan with incredible upside with a good team in place. If you're interested in copper exposure, this is a great name to look at.